A good start for D Street after a market holiday. The Nifty reclaims the 23,300 levels while the sensex ends around the 76,700 points. The broader markets end in the green while the volatility index slips close to around 20%. Realty, auto and financials, they charge ahead while FMCG lags in trade.
Days after the RBI cut repo rate by 25 basis points and signalled a shift to an accommodative stance, top banks, HDFC Bank as well as Axis Bank have cut rates on savings deposits. The move props up bank stocks.
And in stocks in news, yet stocks of Macrotech Developers surge after the Lodha brothers amicably settle a trademark dispute after a 3-month-long battle. GMR Power also surges in trade after it offloads stake in non-operating and stressed assets to reduce debt. Hello and welcome to Markets Forward, your go-to show. We'll get you up to speed with regard to today's trading action and set you up for tomorrow as well. I'm Nigel, and joining me today is Vinny. Hey Vinny, a rather good trading session.
Absolutely, Nigel. A very good trading session. And that's what we'll talk about in the next 20 minutes as well, right? Take you all through what has happened through the day as well in terms of key events to watch out for, key developments on the D Street as well, and events to track. But Nigel, kicking off with the markets, right? An interesting day, continued momentum that we saw.
Well, it was a beautiful trading session. And I'll say that because in Friday's trading session as well, I made this point, it's not where we start. It's where we're going to end. Even today, we were opening up to a gap up and we ended at the high point of the day. So the intraday chart of the market should come up for you. The Nifty's last tick actually was at the day's high. The bulls will like it. Not only gapping up, but ending as well at the high point of the day. Now, important to note that the Nifty actually has made up any kind of losses that we saw post-Trump's tariff announcement, because we saw correction towards the 21,700 odd mark, and now we've recovered all of those losses. So good looking screen. India has started outperforming the globe. That's the key point for me. The Nifty Bank, that's been bursting ahead. It's conquered all technical levels, 20, 50, 100, 200. And in today's trading session, it hits the highest level that we've seen in the last four months or so. So the Nifty Bank seems to be getting its mojo. Bank valuations as well out there, pretty okay. And a lot of interest back in those names. The advanced decline ratio, well, that should come up for you on the screen. You have 2,300 stocks that were advancing. The ratio was close to around 10:1, and that's where your portfolio will be feeling very good. And just one more data point, Vinny. On days when the markets were sliding, we had sometimes 400-500 stock that the door was closed, there was no exit. In today's trading session, close to around 450 stocks on the BSE were at upper circuit. That means that there were pending buy orders. Well, what a way the markets turn around, right? Sentiment seems to be back, interest is back, and that's always a good sign.
Absolutely, always a good sign, and that's seen like advance decline ratio is so favorable as well in terms of the advances, and that's why the mid and small cap, we saw that outperformance coming in for the Nifty mid as well as a small cap, both holding on to gains of almost 2-3% in today's trading session that we saw. Other than that, when you're looking at it in terms of the top sector move, we have the Nifty Realty as well as auto. Auto, obviously, after those comments that came in from Trump overnight and over the weekend, is something that is keeping these auto stocks abuzz as well. Now, FMCG, yes, ended on the positive side, 0.2% of gain more than that we saw for the Nifty FMCG, but versus the other sectors, it was a bit of an underperformer. ITC, HUL, it's a bit of a lag coming in from these top names from FMCG side. But yes, that's what we're watching out for in terms of the market. Will be interesting to see where it goes from here on as well. But well, here's the lineup for you all that we have in store for you today. We'll start with the top movers and shakers of the day with Vivek. And well, the stock of the day were HDFC Bank, GMR Power, as well as Macrotech Developers. We'll give you key reasons of why these stocks were buzzing in today's trading session. And last but not the least, we'll look at the key events to watch out for in tomorrow's trading session as well. On that note, let's get started. And for the first segment for the day, Vivek is joining in with us from the big wall to tell us which are the important stocks in terms of the movers and shakers, what's happened for the day as well. Vivek.
Thank you so much for that. What a wonderful trading session. The advanced decline ratio, the broader end of the market is very, very strong. Absolutely nothing to complain about for the bulls today. What led the markets higher? Rate sensitive. So banking pack, all of the banking cluster are doing very well in the session. HDFC Bank, news flow coming in there, positive news flow, up 3.5% higher. IndusInd Bank, 6.5% higher. And along with that, the whole host of private banks, IDFC First Bank, news of preferential fundraise via preferential allotment, that particular stock too, doing quite well. The entire auto pack, auto ancillaries, tire stocks. The entire pack moved higher today. Samvardhana Motherson, one of the top gainers in case, no tariff does come through. That stock higher by 8%. Bharat Forge, a 7% move today. Some of the tire stocks doing very well like Balkrishna and MRF, and Ashok Leyland also topping off the list there with a 3% gain. What also did well, the entire realty pack, a very, very strong bounce back. Macrotech Developers low down on the back of the positive news flow of both of the brothers coming to an agreement. That stock are higher by 8%. But the other realty stocks weren't left behind. So names like Anantraj, DLF Prestige, all of these stocks doing very well in the session. Now, moving to the broader end of the markets, if you look at the NSE 500, Sai Life Sciences, that particular stock doing very well in the session today. And Mazgaon Dock, again, this particular stock was one of the stocks that actually saw very, very strong volumes, and it ended as the top mid-cap gainer. On the other hand, very few negative stocks, but one of the stocks on the back of regulatory concerns, Allied Blenders ended low by 3%. Saw a bit of a recovery, clarification coming in from the management towards the end of the trading session. Bit of a bounce back, but ended 3% lower. And Aster DM Healthcare, the NSE 500 top laggard, and that particular stock ended lower by 2% today.
Okay, all right. Thanks a lot for that, Vivek. Well, those are all the top movers in trade today. But let's get in our guests. We have Jai Bala of CashSecures.com who joins us, and Sudip Bandyopadhyay, Group Chairman at Inditrade Capital, who joins us. Hi, gentlemen. Thanks a lot for joining in. Jai, you go first. Good recovery. We are thumping the table. The bulls are feeling good. Are you feeling as good, or do you believe that this market is providing you very good shorting opportunities? Because that's been your stance for the last few weeks or so. The Nifty and the Nifty Bank, what are the levels you're looking at?
Yeah, there is no a fixed ceiling for Nifty at the moment, Nigel. So that's the reason why it's not presenting a good shorting opportunity. Probably it needs to fix the boundaries and show that it's resisting a particular level. The fact that markets went below the March lows in April, that's a lower low signal. And the bounce right now is looking corrective for the markets. So I'm waiting for the markets to define its boundaries so that it can present a negative opportunity, but it's not yet. Probably, the boundaries aren't quite clear. So 23,870 is the nearest resistance I can see for the market. I don't know if it's going to get a lower low below that and then try to clock a low below 21,743. So watching out for that. But what is interesting is in the banking space, HDFC Bank is probably trying to complete a major pattern from the pandemic low. If it can cross 1880 record highs and then little past that and reverse, that will probably give a negative trigger for the banking sector. And HDFC Bank, by its weight, can give a negative trigger for the overall market too. And even the US markets, from the recent bounce of last Monday, from an intraday perspective, which gives an early indication, it's showing that this is probably just a corrective bounce within a bear market rally.
Okay, let's move on. And the shares of top automakers inched higher in today's trading session. And this came in after US President Donald Trump expressed willingness to support the automotive sector. Sudarshan is joining in with us to give us details on this one. Sudarshan.
So it was a good day of trade for majority of the auto companies. While the entire market was up, the auto sector was one of the biggest outperformers, and especially names like Samvardhana Motherson, Sona, BLW, both these names were up 8% each. Also, we have seen healthy gains in the names of Tata Motors, Bharat Forge, and other auto stocks. Now, this came on the back of the latest announcement related to tariff by US President Donald Trump. He said that he's looking at modifying the tariff announcement that was made, the 25% tariff on foreign-made auto companies, especially autos and auto parts. Now he has mentioned that this would be done for the imports from Mexico and Canada. That was the reason we saw a big move in Samvardhana Motherson and Sona BLW. For Samvardhana Motherson, Mexico forms nearly 4% to its total revenue, and for Sona BLW, Mexico's contribution is in the range of 2 to 3%. But why is it so positive? Now, if you look at the Mexico-produced vehicles, contribute in the range of 30 to 60% to US companies. For example, companies like for GM, General Motors and Toyota, the contribution is in the range of 30 to 40%. For Volkswagen, the contribution rises to almost 60%. And Samvardhana Motherson is one of the biggest suppliers to these names. Now, why did we see big gains in other auto companies too? Now, there is a big hope that this softening of the tariff stance will not be limited to the imports from Mexico and Canada. It can be extended to even other countries, and that was the reason stocks like Tata Motors also saw a big move of 5%.
Okay, surely keeping an eye out on these auto stocks. Thank you so much for that, Sudarshan. But Sudip, coming to you, what are you looking at in terms of the auto pack? Any of the names that Sudarshan highlighted, are they interesting, or you would go with maybe just those names like Tata Motors, M&M? Is that on your list?
Well, Tata Motors, I'll be a little cautious because nothing has been announced as far as UK and China is concerned. I think UK continues to remain a large production base, and they do export into US out of UK. I mean, if and when there is exemption announced as far as UK is concerned, they may benefit, but this is in the realm of speculation. And knowing the way the policy making is happening in US, I will probably be a little cautious. If I have to look at one of the automobile companies in India today, I'll look at M&M. I think there are enough legs to support that. Of course, the SUV business is doing exceedingly well. They are leading as far as SUV sales are concerned. Also, the tractor business is expected to pick up. There has been a prediction of normal rain by SkyMet, a normal monsoon by SkyMet, and IMD has now predicted above normal monsoon. So I think this augurs well for M&M's tractors business. So I think at current level, I will look for M&M, not any other auto company for the time being.
Okay, all right, got that. Let's turn our attention to the biggest sector of the day, though. Banks were in focus today, and a couple of those names like HDFC Bank and Axis Bank, both of them were higher in trade. Lenders, remember, they trimmed their savings account interest rates. Abhishek joins us to break it down for us. Abhishek, take it away.
Well, in a declining interest rate scenario wherein the net interest margin of lenders can come under pressure, interesting move is being seen by lenders, that is they are cutting their saving deposit rates. So HDFC Bank, they have reduced saving deposit rate by 25 basis points. This is the first time that HDFC Bank has reduced saving deposit rate since June of 2020. So saving deposits below rupees 50 lakh will now get 2.75% versus earlier that they used to get about 3%, and more than 50 lakh will get now 3.25% versus earlier rate of 3.5%. So SBI still gives the lowest saving deposit interest rate in India at about 2.7%. Now Axis Bank has also revised its saving deposit rates on domestic NRO and NRE deposit that you have with them. So less than rupees 50 lakh, the new interest rate will be 2.75%. 50 lakh to less than rupees 2,000 crore will be about 3.25%. And rupees 2,000 crore and above to overnight MIBOR, that is about 7.2% plus 0.7%. So that could come to around 7.9%. Spoke to few analysts, they said that the net interest margin positive impact could be anywhere between 5 basis points to as high as 8 basis points depending on the bucket that they use more. Back to you.
Okay, Abhishek, thank you so much for that. Jai, let's talk about banks. Now, whether you are looking at private banks or PSU banks, what are you looking out for? And what I'm seeing is YTD performance. Private banks have done well, like Kotak, ICICI Bank, HDFC, Axis. All of them have seen very good gains, while in terms of the losers, you do have Canara Bank, which is more of the public side, SBI, which has not performed well. So what are you looking at right now in terms of the banking side?
For the banking sector, I think HDFC Bank is the bellwether. It sets the sentiment for the whole sector, be it private or public. If HDFC Bank were to do well, the whole sector will do well. If it were to catch a cold, I think the whole sector will underperform. And we've had a recent negative price action for IndusInd Bank. From that, it's looking like the private sector banks are right now, which are doing okay and in fact reasonably well. They could be the ones which could be causing the downdraft if what I'm anticipating is likely to come through. And PSU banks are, they still, if you take the SBI stock as the leader, when that's not signaling the bounce from the 670 odds levels for SBI, it doesn't look like a start of a new trend. Although it didn't clock new lows, but there are certain price parameters where what we watch for. That's saying that the recent move of the low from 670 odds to 780 plus and change, it's still a corrective bounce. So, both the private sector and public sector space are looking like they don't have too much headwinds, though too much upsides left, although the private sector banks are slightly outperforming. And I had pointed out I'm anticipating one final high to come through for ICICI Bank 3-4 weeks ago.
Okay, all right. Jay, got that. Well, let's focus on the broader market. GMR Power, well, that stock was bursting away in trade. It's divested a couple of their non-core assets to deleverage their balance sheet. Actually, Vivek is standing by to tell us exactly why that stock was a rocket today. Vivek?
Well, that's right. So GMR Power and Urban Infra, that particular stock, one group of stock from the GMR group, one that we don't discuss too often, but today higher by almost 13%. Remember, at the end of the March quarter, the company informed the exchanges that they had reached a one-time settlement with the lenders. And what is it that the company had announced to the exchanges? Number one, they're divesting stake in 3 non-operating and stressed assets. This is to a private equity firm called as Synergy. The total consideration of all of the stake transfers is worth close to 653 crores. So what are the 3 assets or 3 power assets that the company is divesting? First one is a 180 megawatt hydroelectric power project where the company is looking to divest close to 80% stake. The second is a 388 megawatt natural gas power plant, and the third is again a 768 megawatt natural gas based combined power plant, of which it will go ahead and divest close to 51% stake. Why is the company doing this? Well, the company says, number one, gas-based power plants of the company that they are divesting were unable to operate efficiently on account of non-availability of affordable natural gas. Number two, the transaction will help the company to meet the proposed one-time settlement with the lenders. The move will help delever the balance sheet by close to 4,400 crores, and along with that, all of the non-operational as well as stressed assets of the GMR group will move away. So overall, a positive development as far as GMR Power is concerned, and the stock one of the top gainers in the broader end of the markets today.
Absolutely, Vivek. Thank you so much for that. Saw strong gains in today's trading session. But another stock that was buzzing in trade today was Macrotech Developers. Now, why the stock jumped in trade? Other than the real estate pack obviously was buzzing, but Macrotech Developers had a specific reason as well. The Lodha brothers, that is Abhishek Lodha as well as Abhinandan Lodha, there was a dispute going on for the trademark of the word term, that is the brand Lodha and Lodha Group. Now that has been resolved, amicably resolved between both the brothers, and that overhang or one has an issue or worry that, where would this be heading? That has gone away from the stock. And that is why that we're seeing that Macrotech Developers was also buzzing in trade because of these issue being solved. Now, Macrotech Developers will have the trademark towards Lodha and Lodha Group, while Abhinandan Lodha will have the trademark for his house of Abhinandan Lodha. So yes, that's the issue that has been resolved, and that is why the stock was holding on to gains of 8%.
Okay.
Nigel.
All right. Any interest, Sudip, in any of these two counters?
Well, I think, the real estate pack, Nigel, definitely looks good. We have been positive on real estate for quite some time, and we maintain our view. We believe that there is a secular, upcycle going on in the Indian real estate space. And probably we are in the middle of that run. So there is some way to go before that upside gets exhausted. If I have to buy one real estate stock, I'll go and buy DLF because, of the multiple positive factors, premiumization and the kind of land bank they hold in NCR. But even otherwise, whether it's an Oberoi Realty or Macrotech, as far as Bombay Developers are concerned, they do look good at current level if you have 1 year plus kind of a time horizon in mind.
Okay, Sudip, thank you so much for that. But, Sudip and Jai, thank you so much for joining in with us on the show. It's always a pleasure getting your insights. On that note, we're going to slip into a very short break. But after the break, we'll get you the key market events to watch out for in tomorrow's trading session.
Welcome back. You're tuned into Markets Forward. And as we normally do, we tell you about today's trading action, but also we set you up for tomorrow. Vinny, tell us about the key events we need to track.
Interesting events that are coming in as well. From the global front, before I reach global earnings, which will interest you, I'll talk about the global events to watch out for. In the US, you're watching out for the industrial output as well as the retail sales data. Important to keep out on those data points in the US market. China, the GDP for Q1, that's what they'll be releasing tomorrow. So maybe we'll see the markets react to that as well. Industrial output in China, the housing data in China, as well as retail sales for the month of March are key to watch out for in China. UK, let's watch out for the CPI as well as the PPI data. And overall, the World Trade Organization is going to be publishing their annual global trade outlook and statistics. So given the current scenario, let's keep an eye out on any interesting data points that come in from that front as well. Now, other than that, global earnings, Alcoa will be reporting their numbers tomorrow. So this will be post-market hours for us, but still keep an eye out on Alcoa on the global front. And domestic, a lot of earnings that we have tomorrow, starting with the IT pack. We have Wipro that will be reporting their numbers, Angel One then, and Swaraj Engines, as well as Avari in Renewable Tech will also be reporting its Q4 earnings for FY25. And where these earnings are going to be headed, Nigel, is going to be important because it's been a bit of a subduedness that we've seen in the last few quarters in terms of numbers. Now it's going to be key if they deliver those.
Thanks a lot for that, Vinny. Well, before we wrap up on this edition of Markets Forward, we leave you with some key market commentary that we got in on the impact of Trump's tariffs on the global economy. Listen in, and we'll see you tomorrow.
One is that of price correction and the other is that of time correction. I think we ended the price correction last Monday at levels of 21,800 because I think the technical studies, the breadth, the sentiment, the news flow, everything came together to possibly indicate that it was a panic bottom. Thereafter, we've seen very good constructive action. I think the Nifty is up about 1,200, 1,300 points in no time. And I think we've entered a period of time correction. I think a lot of money which was on the sidelines is now at work because I think participants believe that most of the negatives are discounted. So that's the reason you are seeing this very good-looking flamboyant rally. But I would not read too much into it. I think 23,400 and 23,800 are numbers to which the Nifty can move to. And broadly over the next 2.5 months, I think we are going to stay in a sort of a range. We will not make significant we will not see significant upside or significant downside. But between now and the end of the year, I think it's going to be a stock pickers market.
Decades of US benevolence, looking after the whole world and therefore suffering the problems of the world, paying for other people's wars, becoming a home market for others with probably among the lowest tariffs in the world. And then over the last 15 years, they printed money like crazy to come out of whatever crisis they had. Their only weapon was printing the dollar. What that's resulted in is a completely warped current account, a completely warped fiscal deficit, and a decline of really American, how shall I say, power in the world, in military terms and so on as well. And there's been this debate for 10 years now that is the US dollar about to lose its supremacy? And everyone's been kind of pegging away at the margin to see what the alternatives can be. So what he's coming to do, I think objectively, someone needed to do it. And it's high time someone got after what they're trying to do to fix the fisc, solve the debt problem, get after current account and so on. And it's very clear, China and US are now the new adversaries. And the world may be heading into a all-out war at some point. Now, what form and shape this takes, it's not like the old days where you send tanks and millions of people into battle, but maybe this is the new form of warfare to keep the other guys suppressed and down. And the US has actually led this benevolence towards China after they brought them into the WTO and basically just abdicated their entire manufacturing prowess to them. And it's to China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world. I would say already equal, if not ahead of US already. So it's high time someone did this. From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up